Well, welcome back, class. We're here at Part B of the budget now. The first part, Part A, we talked to you more about the planning and the stages of planning and deciding before you get into the budget. Today, this time, we're going to talk more about the budget as preparing a budget and what involved with a budget. So, if we look at a budget, understand a budget as written or maybe an unwritten plan that projects the use of assets for a future time. That's the definition of a budget. Understand it's a how and when to spend money, and understand that it's a guideline or a roadmap to help follow where the money needs to flow. And the idea behind a budget, it gives you that map of how to spend the money so that you can direct the money where you want it to go. The purpose of the budget really is to determine your financial needs and wants. And when we talked about earlier about needs and wants, needs are what you have to survive. Wants is something after all your needs are met. And you do this as an individual, you do this as a business, you do that when you do projects, and you do that as an enterprise. So we said determine finance, you determine your financial needs and wants, right? You have your need list and your want list. You got to satisfy your needs first before you move to your wants. And then you determine how much will be spent on each part of the operation. And by collecting the information, by planning, you're able to make a wise decision on your budget. So the third thing about a budget, you help to, especially in business, you document to the lenders how much will be spent on a project or how much it's going to cost. Or if you go in to any kind of an operation, they want to know basically how much it costs them, or if you're providing a service, they want to know how much it's going to be, and you can give them a budget about how much it's going to be roughly about. It's going to help guide to live by for spending. That's the idea behind a budget. It helps you guide through how you're going to spend the money. So the purpose of a budget then is the last one, compare your options or possibilities with a budget by collecting information, by watching the trends you've been in, by seeing how you've been spending your money over the past year and so forth, or even the month. You can have a better idea about what your options are and what your possibilities are with your money. There are 4 sections in a budget that you're concerned with. You're concerned with the income, that money coming into you. You're concerned with the expenses, which is broken down 2 ways. Variable cost, which means, for example, SRP or electric bill, it's not always the same exact price. It goes up and down depending on the season, right? So those would be variable costs. And then you have fixed costs that you know every month is exactly the same thing, like maybe your mortgage payment, your rent payment, that's exactly the same cost every month, right? And then at the end of that, you know exactly after you pay your expenses out your income, you know what your profit or return is supposed to be at the beginning of your business or a individual. So as you develop a budget, you look at a budget as one, you have to estimate your total revenue or income that you're going to receive. Most of the time, if you start keeping a budget from year to year, you can start seeing trends and things that you've done. Most of the time, budgets are really broken down month by month when you talk about individual or businesses, so they know how much they have available to them per month. So you estimate at that time how much, you can look back at records or know what you've been doing, what the cost is going to be for the variable costs and the fixed costs, which is also known as expenses. And then you can come up with your estimated net returns for that. That's basically how a budget flows, okay, how you set up your budget. So, for example, then let's take one example that say $10,000 is your estimate of your income you're going to have. You know that your variable costs are around $2,500 and your fixed costs around $2,500, which gives you a total of basically $5,000 you have to work with. So you have estimated your profit or net return, what you're going to have to work with. And from that $5,000, now you can start addressing some of those wants that you have that you want to address in your business or in your personal life or household. So going back to those 4 sections again, remember income and the 2 and 3 there, variable and fixed costs are expenses that you're going to pay out from your income. And then what's left over is basically your profit or return. So if you look at a budget plan, we put that down. We look at another example here, $1,000. You set the rate for your fixed. So you know that roughly money going out for your fixed cost is 500. Your estimate that goes up and down. Most of the time people will average that out over the year, and they come up with a pretty good idea about how much monthly they can depend upon, and they just put it down in a formula like this. Your $1,000, you minus it from 175, minus from 500. That equals your profit or your revenue or your income you have available to you, which is 325. This here is your formula that you would use to put that down to find out where you stand with your budget. So, if you go, for example, and take a budget here, and you look at an overall budget, what you do by collecting information from the year before, you look at your last year budget amounts. You look at your yearly amounts. For here, look at Bobby and Kath. They both had mostly Bobby had 35,000 and Kath had 35,500. And their taxes was estimated, and they paid $8,000 in taxes. That gives them an idea what was last year. The next thing you address for the new year is, well, is there any changes going to happen? You're both going to keep your jobs? Are there any raises involved? Are there any decreases involved? Then you make those changes in that category. Then you're ready to start putting your new budget together for the new year. And so then you put the real amounts down, how much you're going to change, either increase or decrease, or it stays the same. And then you break it down by month. How much monthly is that going to show up? And that's where a lot of people try more realistically look at that. They look by monthly, and some people having broken down by each payday. You get paid twice a month. Some people break it down even to that smaller amounts as well. So you look at changes in the budget, what you look for. So example, if you had $40,000 last year, and you have a 3.5 raise for your fine work you've been doing. So realistically what you'll do a little math here, and you take your 40,000, and remember the old math rule about percent. When you use a percent to find a figure, you drop the percent sign, move the decimals 2 places to the left, and that gives you 0.035 equals, and then you multiply that, and that equals $1,400 will be increasing your pay, which is pretty good pay, great increase for the next new year. And so your new income will be $41,400, which that's going to be you're going to make an adjustment on your income for the budget for the new year that will reflect the increase. Now understand a budget will help control your spending of money, and that's the purpose of a budget, to help you control your spending of your money. It helps make adjustments when needed, so it's not really a hardcore. It's a focus on where you're going to put the money, but you can adjust it as you need to, as depending on how things arise. And then also it's a tool to master your money and not allow money to master you, as we talked in that book report that you did earlier about how to master money. And then it's a basic tool to help planning and decision making, that you can make plans and decisions on what you would do with that money. And that's in the part B. You can take a break, get a drink of water, come back to us in part C as we finish off the thing on budget.